Asian markets, they're off to a weak start early today.
I normally wear this combination when I have a premonition of a big rally.
Oh, really?
Yeah. I think the market is due for a 100-point rally today.
I think the case for emerging markets is pretty strong for 2019.
Okay, there goes the bell, and it is a 0.25% gain. So it's 0.2 actually, 24 points higher, 10,699.98, so 10,700.
There is general temporary slowdown which we see, which will pick up in our view after the Chinese New Year.
We do believe that the fiscal deficit will at worst be, say, 3.5% for this year.
The Nifty is currently just about flattened out, just about hovering around those 50-day moving average levels for the Nifty.
Operations could come to a standstill, and future revenues are again, and cash flows are in jeopardy.
You could look at Asia, you could look at the US futures, you could look at currencies. Everywhere there is a turn and a strong turn which is visible.
Okay, intraday high of 75-point higher, so that 100-point move perhaps didn't really happen, but we went almost 3/4 of our way there. After that, there's been one more slip. IT, of course, is the one sector which has really been the spoil sport today. Banks have relatively outperformed, perhaps on expected lines. This is Closing Bell. I am Anuj with me, Surbhi. Hi, Surbhi. Good afternoon.
Good afternoon, Anuj. I mean, this has been kind of a nightmare day for most traders because you would have been whipped, I think, both sides, the way it's played out. The other thing that kind of I noticed was that it's been a day of underperformance from India's standpoint. Look at how most of the Asian markets have closed out, or even how Europe is trading right now. So for today, for whatever reasons, we've chosen to sort of, be very range-bound and volatile. So last 1 hour, you think we'll get more of this volatility?
I think it's been a good day for traders, Surbhi. I think if you basically respected the risk-reward, the market gave you a first dip. You should have, bought that. And then the market, went higher and higher. After that, in intraday, I think we got some, from the low to the high, I think 75, 80-point rally. At the low point, once again, the risk reward would have been that, the low is 10,000, for the support is 10,550. And I think, but if you're buying in the last hour or before that, chasing this move, that obviously hasn't worked, right? So this is not a place where, you want to buy these breakouts. You want to buy plunges. You want to buy plunges and dips. Now, over the last 1 hour, there's been one more plunge, one more dip. Will be interesting to see if that gets bought or not. You have to patiently wait for these plunges and these dips to buy, but not chase momentum. You can't be buying after the Nifty has broken out, or it's up 60 points, or the bank Nifty has gone up 250 points. Then you can't buy. But at lower levels, if you buy, I think you've made decent money. Let's see, there are a couple of niggling worries for the market. I think the bond market is throwing some tantrums. I think that's one issue which is something that you will have to keep on your radar. The yield now going up to 7.47 thereabout. And the other is crude prices. I think don't lose sight of that. We're priced in 50. From the lows of 50, it's very quietly moving up. I think it's gone to 57 thereabout, 56.80 now, almost up 1.5%. Just like, when the global collapse was happening and we were outperforming because in that crude was falling, in that case, that is a bit of a risk for us on the way up. Having said all of that, I think the fact that the market is still in a range and is respecting boundaries, I think that for me is the larger message of today.
Okay, well, let's see what the next 1 hour, last hour of the week throws up. Here's what's lined up on Closing Bell today. The market has been trading in both red and green territory. Right now, back in the green, shrugging off the weakness that we saw in the morning. Benchmark indices are up just about 0.1%, close to the flat line. HDFC Bank, Reliance and ICICI Bank bat for the bulls, while IT stocks slip. We'll be discussing all these trends with the fundamental experts, SP Tulsian of sptulsian.com, BSE and NSE, a member of BSE and NSE, Deepan Mehta, and Dilip Bhatt, joint MD at Prabhudas Leeladhar. Now, with fears of this global slowdown persisting across markets, what is the growth outlook for India? What are the stocks and sectors that you can watch out for? We asked Sindhu Samir, co-head institutional equity sales at MK Global Financial Services. And of course, along with that, lots of trading ideas coming your way through the next 1 hour with Ashwani Gujral and Mitesh Thakkar.
Okay, before that, just pull out intraday chart of Nestle. I don't know if there's any fresh news. Of course, this whole Maggi fiasco coming back at a time when the stock got its mojo back, had reached all-time high. But just in the last 10 or 15 minutes of trade, there's quite a bit of aggressive selling happening on that stock, down about 4%. And the other one which really stands out is Page Industries, the most expensive stock in our market, has been for some time, perhaps even at 20,000 or 22,000, one of the more expensive stocks, down another 4%. We were talking about this stock yesterday as well, and today also is down about 4%. But anyway, how should you position yourself in this last hour of trade? We have Ashwani and Mitesh joining us with closing strategies. Good afternoon, Ashwani. Right in between the high and low point of the day, what's your call now on the index and your stock calls?
See, given the way the momentum was shaping, I mean, you should have crossed 10,750 on the Nifty. The kind of volatility and the kind of collapse we've seen from the top is not very comforting. The market is range bound, and that's the way it's sticking around. But a sign of strength would have been a decisive close above 10,750, and on the Bank Nifty above 24,700. What's happening is that you are having a bit of a sell-off from the top, and we've taken off long positions on Bank Nifty, and again building some sort of shorts, because if we can't cross this 10,730, 750, then the short trade is still alive. And if you see Europe, etc., 30-35 point type rallies, it hasn't looked like a strong move all day. And if you can't sustain even a single day's up move, then it's only a matter of time before we start caving back in. So we are now long on 27,000 puts, and hardly 18-20 point Nifty rally. I don't think this is going to go very far, and I wouldn't be surprised if in the last hour itself you start to see a sell-off again. Individual stocks, LIC housing is a buy with a stop of 484, target of 500. DCB is a buy with a stop of 170, target of 184. And Federal Bank is a buy with a stop of 90, target of 102.
Okay, so pretty choppy all over the place. Those are Ashwani's bets. Let's now move on. Mitesh, good afternoon to you. How have you sort of navigated this volatility today? And on the stock side, what's the call now?
Yeah, good afternoon, Surbhi. I think very clearly there are two things which I can possibly take from the day. One, the Bank Nifty still continues to outperform and is the stronger of the two indices. And secondly, I think Nifty on any pullback is failing to get past the 10,725, 745 zone. And therefore, I think those are the levels which traders should keep in mind in case you're looking for an upside reversal. Short players should also get their stop losses there. And on pullbacks closer to those levels, I think would be good shorting opportunities. So I believe that the structure is on the weaker side. So if we don't capture 10,750 by today or max by Monday evening, then I think there's a greater chance of falling to about 10,550 or even lower levels. Two calls. One is buy and a sell. Bharti, I think, is now showing good traction on the intraday chart. So buy with the stop at 317.5. Look for targets of 336. And HCL Tech, sell with the stop at 945 for targets of 910.
Okay. Thanks a lot for those trades. We'll keep coming back to you. SP Tulsian of sptulsian.com and NSE and BSE member Deepan Mehta now join us. Good afternoon. Mr. Tulsian, let's discuss the two stocks that, we discussed actually yesterday as well. And you clearly made this point to avoid. Quite a bit of shave off now on Page Industries for starters. And of course, Nestle as well now down about 4.5%.
See, Anuj, we have discussed this yesterday in the afternoon show. Today morning also we have discussed on that. And if I just continue with one example, of the Apple, yesterday we have seen the carnage on the US market, largely because of Apple. At one time, the peak market cap was 1.1 trillion. We have seen the market cap shaving off by about $350 billion. Maybe in this last 2 or 3 months, I don't have the exact data point. And the company is having cash of about $250 billion, and still the share is now, after having corrected by about maybe 30% or 38%, is now ruling at a P multiple of 8 or 9. Why? Because now people are start calling it as a single product company, and you cannot really give this kind of valuation to a single product company, and the case in point is Apple. And now come on the comparative stocks, two stocks which in fact I have been cautioning for the last 3 days post the numbers of the sales having come in for the Eicher Motor and Page Industries. And in fact for the Page Industries I have been cautioning when it was ruling at about 36,000, because still if you take the call on the earnings for first on page, I don't think that the next year's EPS can be more than 450, or take the, if you want to be extremely positive, 460, 470. I'm referring for FY20, and still the share is ruling at a P multiple of 53, 54. So in this scenario, if you have a muted kind of growth, muted means in reference to the P multiple of about 25-30%, I don't think that there is any justification. Similar is the case with Eicher Motor also, because having the trajectory falling from 75,000 vehicles per quarter to 70 second quarter, 65,000 third quarter, definitely you will be having concern. So in this scenario, and actually this is what I've been saying maybe in case of Page for last couple of months, and maybe on Eicher for last couple of days, that the PMS and the funds are sitting huge on this stock, and every day we are seeing the delivery based selling in case of Page Industries maybe to the extent of 20-25 crore, while there are no buyers. So obviously, unless until they reach to a realistic valuations, which could be maybe 18,000 for Page Industries, or maybe about 18,000 even for the Eicher Motor, then probably one can take a call. I'm not taking a technical factors in between. If some technical correction comes in, then that's a different case. But the time is there to look for the comparable peers available margin of safety and the growth prospects which are seen in the other stocks. So it is very risky always to jump into the high P multiple stocks, that too in a volatile market, or in the time when you don't have the visibility or the caution is required for next 4-5 months for the Indian market.
Okay, tell you something, from the low point, the market is again recovering, and especially the Bank Nifty. Just see the chart on that one. I think from 215 low, the Bank Nifty is again rallied about 100 points. This time led by IndusInd Bank. See the intraday chart on IndusInd Bank, and also perhaps Yes Bank as well. So once again, a couple of stocks standing up as far as the Bank Nifty is concerned. The last bar is big green one. Yeah,
absolutely. I mean, some of these banks are recovering. Interesting trade on OMCs as well. Maybe it's some shorts that are covering now, taking the profit. BPCL and IOC, I can see some of these stocks also move higher. Days high on BPCL. Speaking of highs, actually in the broader market, Delta Corp is definitely finding takers. Stock is up almost 3%. It's moved very sharply in the last couple of minutes of trade.
I think there's been some. It's outperformed. I think there's been some talk of that gaming policy
in Goa to finally come through. Yeah,
not just in Goa also, but in general, there's some kind of momentum gaining up. But yes. They have also, there's this Daman issue which is still hanging. Of course, they've appealed if that could be open. So, and of course, so that could be the reason. But yes, I think it's outperformed, I think, the mid-cap index.
It's been a decent week for Delta Corp. We have Deepan Mehta joining in. Deepan, let's get your thoughts on Delta, if you would look at buying it right now, because it's kind of flatter to deceive. Last couple of months, lackluster movement.
Yeah, first a disclosure that we and our clients are invested in Delta, and Delta was in fact my Diwali pick on your channel. So we're very positive on the company. I think that gaming per se has got good structural secular growth. At the same time, there could be fresh triggers, as Anuj mentioned, about the Daman facilities. And then there's also the Sikkim casino, which should gradually scale up now that there's an airport over there. And I think very tactically the company has diversified and got into online gaming. And that also could be a good kind of spring for the company to grow its earnings going forward. And the stock has actually been pretty much flat, but last 2-3 quarters earnings have been moving up. So valuations also are quite reasonable. So I think someone with who has a little bit of risk appetite, because there's always the risk of a policy change in a company like Delta. So if you have a little bit of risk appetite, I think Delta could be a great performer over the next 3 to 5 years or so.
Okay. Mr. Chan, how much of this news about the banks like Axis and ICICI getting this money from SR Oil Rosneft deal you think is in the price now? Because it's known information now. Stocks, of course, have done well today. But your thoughts?
I think this is old news. The deal got concluded about 3-4 months back, and this has already been in the public domain. I don't know the clearances, the remittances and all may have may get booked in the Q3 numbers, but this is already seen in the price, because SR Rosneft deal of $14-15 billion was really seen the landmark deal, and when the people were expecting, and probably, and even I have been saying that SR will be proactive in retaining the control of SR Steel, which they did not initiate or did not take the measures in time and waited for the last moment. But this was known of SRO, Rosneft deal, of which already this amount has come in to the various lenders, including Axis Bank and ICICI Bank, because SR Oil had a debt of closer to about $10-11 billion, and the deal has happened at $13-14-15 billion. So this was an old news, and I don't know whether the accounting Q3 numbers will book, and that will be again making up stocks to move up both. But we have been keeping positive view on the corporate lenders like ICICI Bank, Axis and SBI going forward.
Speaking of lenders, big move on Yes Bank underway right now. Let's just pull up the intraday stock. 190, almost 190 on this one. Mitesh, quickly the next levels to watch, because if indeed this is a significant break and a sustainable break above 190, then what next perhaps for this one?
Actually, Sunil, the key level here is 193, 194, and I've been waiting for a breakout above these levels because the indicators seem to have bottomed out. The stock has corrected from 400 to about 170, done some sideways activity. So I think once we get past 194, there should be more momentum, and I would look at a target of roughly around 215 to about 218 on the upside.
Mr. Sen, your thoughts on Yes Bank finally breaking out of this 150 to 180 band? You reckon there are more gains here?
See, I think rightly so, it is preparing for the events, because on 9th January, which is seen to be the deadline when the Yes Bank will send in fact, yesterday also I've said that, or maybe the day before, for the last 2-3 days I've been saying this, that 9th January is the date when the bank will send the 3-4 names, shortlisted to CEO and MD, which they have selected for approval by RBI. And once that news comes in, that itself will be quite positive, and I won't be surprised to see the stock moving up, or maybe breaching the level of 200 rupees also on the upside. So it is just, heading towards or maybe preparing ahead of the events, which is scheduled for 9th January or maybe 10th January, if it happens on the 9th evening. Yeah.
Okay, well, that move on Bank Nifty, this really is interesting, because once again, if you bought the last plunge, you are making money. So just look at that move again now, 230 points higher, and the Nifty also once again making a move higher, 41 point higher is what you have on Nifty. I think it's the second time the market has done that. Once, I think, from 10 to 10:30, and second in this last hour, 2:30. I think made this point that perhaps there's one more plunge that the market's given you. Let's see if that gets bought or not. So far, that's been
interesting moves playing out in the market, while Yes Bank continues to pile on the gains, as does Delta, two stocks that we've already discussed. There is buying on quite a few NBFCs and banks beyond the index today. So, for instance, DHFL is ticking slightly higher. PNB is about 4% up. Union Bank, quite a few of these, Allahabad Bank. So, lots of PSUs are once again trying to find their mojo.
And not just PSUs. I think the stock that's really now batting for Bank Nifty, Yes Bank, of course, is a mover, but IndusInd Bank, Surabhi.
Yeah.
I think just pull out the intraday chart on IndusInd Bank. It's almost been a forgotten stock, right? When was the last time you really discussed IndusInd Bank? I think that's the one where, it won't show in, of course, this graph, but from the low point, it's the one which is really seeing quite a bit of buying. In fact, if you see the futures plate, all of a sudden there's a 10-point premium opening up on that one, and there's quite a bit of buying that you're seeing on that stock right now.
Deepan, let's actually take this up with you. I mean, give us your favorite stock on the private sector side right now, and also if you were to play the PSU bank trade, I mean, even from a pure trading standpoint, are there any names that you'd go with?
See, I think IndusInd Bank, you need to also account for the fact that the merger with Bharat Financial is about to get completed. It should be done in the next 2-3 months or so. And that could act as a trigger for increasing the earnings growth rate for IndusInd Bank. Also, it's amongst the first of the block when it comes to reporting the numbers, and it's been a consistent performer. And we just need to get some more clarification on the ILFS loan which they have given and how much additional provisioning is required over there. But other than that, I think we've seen a compression of P multiple for IndusInd Bank, which should now, I would say there's a case for re-rating the P multiple up over there. So that's one part as far as IndusInd Bank is concerned. And as far as PSU banks are concerned, I think go with the best. State Bank of India, I think, more or less has absorbed all the subsidiary companies' acquisition, and definitely the costs, the credit cost should reduce going forward. And they are the biggest beneficiaries of any of the resolution plans which take place, be it for SR or any other, or Videocon or any of the other larger companies which are facing debt-related problems. So I think go with the best as far as PSU banks are concerned. And IndusInd Bank remains the top pick as far as private sector banks are concerned.
Okay, by the way, just pull out Kotak Mahindra Bank intraday now. And see, we'll do that now, and after that we'll also pull out the contribution plate on the Nifty Bank. That is some move now on Kotak Mahindra Bank from the low point. And what that has meant is now if you pull out the Bank Nifty's contribution, Kotak Mahindra Bank, which at 230 was actually on the right hand side of the screen, which is dragging the Bank Nifty, has started to support the Bank Nifty by a good 35 points. That's the third largest component of the Bank Nifty that we're talking about, obviously. So that helps. So that's one more stock which is looking quite interesting. So that's Kotak for you. Apart from, of course, IndusInd, that's doing well as well. And there are a couple of other stocks as well which are moving in trade. It's been a bit soft though for Hindustan Unilever. Let's pull out that stock as well. Mr. Chen, before we thank you, I just wanted your thoughts on the Bharti Group stocks. Infratel in particular, the last 2 days have been quite good, 7% higher, even Airtel making a bit of a move.
See, Anuj, in fact, we are keeping extremely positive view on Bharti Infratel for the simple reason, in fact, I've said this about a week back, I don't remember, because Indus Telecom, the towers are getting merged, and now this will emerge as the largest infrastructure, the tower infrastructure company catering to telecom sector. And if you really see the situation going forward, I think that will be, and with the equity of Idea, in fact, moving out, the FIIs will be holding the stake of about maybe 60% in the merged entity. So all these things are seen to be quite positive. And I think these kind of infrastructure stocks which are catering to the telecom will really be seen quite, or maybe the big re-rating will come in. I'm not going into the details where in the Indus, Bharti Infratel is holding about 40% stake, plus they have their own 40,000 kind of towers, and the combined strength will be about 175,000 towers of the merged entity. So in fact, we are keeping extremely positive view on Bharti Infratel going forward. That could really give a good returns for calendar year 2019. Because the merger should get over maybe in next 3-4 months. But on Bharti Airtel, I don't think that one should really take a positive view, because we have been keeping negative to cautious stance on the Bharti Airtel even at the current level.
All right, Mr. Chan, thanks a lot for your time today. Have a good weekend. We'll talk to you on Monday now. PSU banks are seeing fresh round of buying after that bit of a decline. Union Bank stands out as the one that really is surging now. Apart from that,
even OBC, quite a few of these names,
well.
Allahabad, all of them are fairly excited again.
I think Indian Bank also, Surabhi. So that's OBC, of course, yes, 4% higher. I think OBC and Bank of India, the strong ones coming out of PCA, and those are the ones which have been re-rated, of course, over the last 1 month or so. I think, and the market gave you that indication about 1.5 months back when you were seeing accumulation in these two stocks. After that, it's been just one-way journey for them, but other PSU banks also looking up right now. Sindhu Samir is with us, co-head institutional equities at MK Global Financial Services. Sindhu, hi, good afternoon. First of all, Happy New Year to you. I think we're talking to you for the first time this year.
So wish you the same to you and to all your viewers at CNBC.
Okay, so what's the big call for 2019 then?
So I cannot get into stock specifics, but the longest runway, of course, is for the private sector banks. With 15% credit growth, I don't know which last year I saw 15% credit growth happening for the banks. And the valuations being not out of sync from the long-term averages. With this kind of a growth, with reasonable valuations and NBFC pain is still existing, I think the longest growth pathways for the private sector banks in general, of course for the banks of course in particular for private sector banks and in general for the banks. It's an easy trade. You need not to intellectualize it. Everybody knows which are the leaders. From these levels also the leaders will give reasonably inflation beating return. Anybody is welcome to participate out there.
Okay, Sindhu, season's greetings to you once again. The intellectual debate is on deciding whether Capex is returning or not, and whether you should buy capital goods or, some of the infra plays or the road contracting plays. Would you place your bets there for this year?
It's not a screaming bet that, and it's not as easy a bet as it is private sector banks. Till you get further confirmations for Capex growth, the best way is that park yourself in corporate banks. So whenever it will happen, the credit, to use the language of the banks, will be passed on to the private sector banks. Once that is through, to play a higher leverage, then one can jump into a specific Capex plays like anything in roads, anything in power and all that. But easy trade to participate in that sector also will be through corporate banks.
Okay, fair enough. By the way, we're talking about that move in DHFL after they made that timely payment of interest. I think the latest one to announce now is Manappuram Finance. They're talking about making timely interest payment. So just perhaps would want to keep that stock also on your radar for last hour. It's a bit of a move happening already on Manappuram, but just that disclosure on the exchanges, of course. So when I asked you big call, apart from of course the sectoral call, what kind of expectations should investors have this year? Because 2017 was a year which perhaps spoiled a lot of people. 2018 did bring a bit of a reality check. So 2019, what kind of returns should one expect?
So not getting specifically into the numbers, the best thing is that the expectations are low. Another problem is that this year everybody seems to be looking towards the West and invest specifically towards America. There is a heightened fear that there can be a recession in America. But the point is that a healthy recession, and the word used is healthy recession. A healthy recession for Indian markets will not be as bad a thing even if it comes. Let's think. What is scaring markets and what is spooking the markets is that because the last two recessions of 2007 and 2002 were binary events when American markets collapsed heavily, we are all in the camp that this time also if there is American recession, it will be binary. Not every fever is a dengue. There are mild cases of flu also. You go back into 1997 recession of America, you go back into 1992 recession of America, they were mild. So I don't think so that we should all put our bets that this time also the American recession, if it comes, will be as severe as the 2007 thing. Also, yes, we are very cognizant of the fact that this is 10th year of recovery in America. And in past 100 years, there are only 1 or 2 times when the recovery has lasted more than 10 years. So if we are betting that this will not be as severe, at the end of the day, investing is a game of probabilities and one needs to assign the probability level that how much it will be a severe or a mild case of a recession. That seems to be the game. Anyone who can place his bets in terms of breaking those bets for the probabilities of a mild or a severe recession is welcome to participate.
Okay, speaking of recessions, the Chinese are trying to do whatever they can to battle their slowdown blues. And there is a rate cut that's come in from the Chinese central bank. In fact, I mean, we don't have the Chinese market trading anymore. But if you look at Europe, most of the markets are doing very, very well. In fact, the CAC, the DAX, the FTSE, most of them are close to the high levels of the day. That is the global picture. So, Sindhu, I mean, if this is not really, dengue, if this is just a mild flu in the US, what does that mean for Indian IT? Because last, several weeks, stocks got into a range. They all came off their peaks and then they've been range bound. So what should one be doing here?
See, just before coming here, I was looking at the last 3-year performance of IT. All said and done, the sector has returned reasonable earnings growth for last 3 years.
Yeah.
And the market has not committed any kind of excess in terms of imparting it multiples which are like 25 times, 23,000. The multiples are all below 20 times. So this is one sector which really should be applauded, that despite all kind of talk of existential crises, all kind of things that the business models are breaking, this sector has delivered growth which is anywhere between 8 to 14%. So it has returned growth. Going forward also, there is not much of a multi-bagging opportunity in this sector, but growth will be locked in. So one can call it a defense, one can call it a reasonable offense, but this sector is here to stay with definite middle teens kind of growth. One can always get into a debate that for that kind of a growth, what kind of a PEG should be imparted. But this is not a volatile space. This is not a volatile space, and lo and behold, rupee is below 70.
Yeah, obviously that's helping. Two-wheeler stocks going through a bit of a derating. Last year it was about Maruti going through some kind of derating. Are you adding any of these stocks, or you think that there's a bit of a, because they are perhaps from valuation point of view now offering you decent sort of elbow room compared to rest of the markets?
Okay. Now, two-wheelers, there is at one end is something like Aisha Motors, and at the other end there is something like a Hero MotoCorp.
Yeah.
Now, if I had that rare ability of going back in time, the penetration level of two-wheelers in India was still way below the global average. In last 5-6 years, that penetration level is not that, you can say, that attractive. India is reasonably penetrated in terms of two-wheeler population. Look at the growth, look at the consensus growth which is being talked. It is no more of 25% kind of earnings compounding. In certain sectors, it is below 15%. The multiples have definitely come down, and in the majority of cases, it is anywhere between 14 to 19. So yes, there is no overvaluation in this sector, but for this valuation, there is not a very smart earnings compounding being offered. 2018 was a very bad year for autos in stocks. All the major auto stocks were down 25 to 30%. So there is no case of losing one's capital on this space. At the same time, I don't see a very smart recovery, at least for next 2 quarters. Of course, there will be a general election, and yes, there will be some kind of a spending taking place both in urban and rural space. That will reflect. But I'll be tempted to wait for that recovery and to manifest that recovery for 2 quarters at least.
Okay. Sindhu, final question. The sector that's really moving higher right now, metals, as one would expect, are reacting to this China CRR cut. Vedanta, Hindalco, JSW Steel, the entire pack, ferrous, non-ferrous, everything is just moving higher. Big spike on the Nifty Metal Index. Now, this is, absolutely, cyclical global play. How would you expect it to play out? On the ferrous side, we spoke with JSW Steel yesterday and they're saying no more price cuts. Would you want to buy a metal stock at this point?
I will buy a metal stock if I have a 2 to 3 year kind of a view. It is the most cyclical. In fact, the definition of cyclicality is metals. So if you have a 2 year, 3 year kind of a view, once the dividend yields on this space also become attractive, that's when a retail investor who is watching this program should enter this space. It is not a buy and hold kind of a sector. You have to find the peaks and the valleys in this space. But I think the way the news flow has been happening for the last 1 month, I'll still be tempted not to jump into this space.
Okay, Sindhu, thanks a lot for your time today. Always good talking to you. And of course, we hope that we keep talking to you through the year. That's the view from MK. Yeah, metals really is the sector of the moment right now. Tata Steel is perhaps the highest of beta names as far as any news out of China is concerned. That's the one which is leading this move, of course. That's Tata Steel up about 1%. Hindalco, Vedanta, the other stocks where you're seeing some gains. But the market itself not quite making a move back towards the high point, but suffice to say that dip between 130 to 230 has been bought, and how. I think the Bank Nifty is now up about 150, 160 points from that low of around 230 thereabout. Deepan, your thoughts on, say, a stock like Tata Steel? Do you want to buy it at 480?
No, not really. I think these metal stocks are very difficult to trade and invest, and there are so many variables, domestic as well as global, which tend to add to the volatility of the stock price as well as the earnings. So it's not for the average investor. I think unless you're an industry insider and you can really predict which way the metal prices are going to move and ahead of the curve, then only I think you could profit from metals. But by and large, I think a global slowdown is here to stay, and that's not very positive for commodities. I would say go with the commodity consumers, the metal consuming companies, could be automobiles, could be appliances, infrastructure companies. I think they will benefit more over the next 2-3 years than buying into Tata Steel or JSW for that matter. And also I think a lot of the metal companies, the large expansion plans have already have gone on stream or will get commissioned. So there is not much scope for volume growth. In any case, I think domestic steel consumption remains in kind of middle to slightly high single digit, and that's not very encouraging from an investment perspective when you want to go for at least earnings growth of 15-20% to make a decent return on investment.
Okay, well, for now, traders are having a field day on these names, metal stocks, almost all of them moving higher, surging higher. Actually, so is the market, Anuj.
Yeah.
Back to 10,730. I mean, it's gone all over, but right now, big up move again.
I think 27 minutes left, perhaps that bet that they had
100 points.
might be coming back on table once again, 53 points high. I mean, look, the point here is, look at the way the Bank Nifty has moved. It's essentially, the morning setup, we were discussing the fact that, it's not really broken its lows, and 26,800 was the 200-day moving average. The closer you buy to that, the better your risk reward. In the morning, the market gave you that one dip. Now, obviously, at around 2 o'clock, the market won't be, charitable enough to give you that dip almost back to that zone. It still gave you a dip, right? The closer you're buying in this zone, you're making money. Today's verdict is that the range of the market is intact. 10,550 on the downside, 550 to 600 thereabout, and 10,900 to 950 on the way up. And you went to the higher end. I think you failed there. Now the market tried to take out the lower end. It perhaps has failed there. And now, once again, we'll make a move in between of the range, and then perhaps await further triggers before, any of these markers are taken out.